Good morning, traders and investors. Welcome to the weekend edition of Wealth Down with me, Novo PM, where I build and protect wealth. We had a really hard week in the markets last week. The market closed at the first week, after the first week of November, with a profound message. So it did close on the positive side, but the message was growth is king, but profitability is the crown jewel at the end of the day. So a flurry of high profit earnings reports from the biggest names in tech, healthcare, and consumer platforms created a significant divide between the have and the have-nots in the market. So we're going to go over the market general look of the market. We're going to go over earnings. There are a couple of really nice reports for you. AMD, SMCI, Palantir, Uber, Airbnb, Shopify, Spotify, HIMS, Novo Nordisk, Celsius, and ELF. And also for a couple of them, I did do a bigger deep dive in my previous videos, so definitely check those one out. Now, after earnings, we also go over which company is going to report earnings the next week, and also we're going to go over my trades that I did this week so far. Remember, this is why we're doing this, in order to make great decisions, a couple of bad decisions, but keep them at a lower pace and build and protect our wealth. So let's jump right into it, the broad market themes and movers here. The week's narrative was tug of war between strong corporate earnings and cautious Federal Reserve communication, all against a backdrop of escalating AI CapEx, capital expenditure that is, because major market themes were as following. First of all, Sam Altman, the CEO of OpenAI, or little platform here, ChatGPT, well, he did have a couple of strange comments to a Was on What podcast, and he told the podcast host that he can sell his shares if he's not happy with the results, and that kind of created an avalanche. But come on, let's be honest, the market is overvalued. If you take a look at it, let's just jump straight into it. The S&P 500, okay, it's underneath its 20-day moving average, hit or surpassed even the 50-day, came back up and ended in the positive, let's say 0.13 on the Friday. So 8.5 to the upside. Also, let's take a look at the NASDAQ, which ended also in the, well, almost positive. The last candle is here green, but it kind of ended at minus 0.25% in the negative. The Dow Jones ended somewhere roughly 0.06 on the week, which is, but still is 12% in the plus for the entire year. The NASDAQ is the stronger with 21.5% in the positive. The S&P 500 70% in the positive. Dow Jones 12% in the positive. That's this year to date. And Russell 12% in the positive. But the Russell, the small caps, Russell 2000, it's currently in the negative zone with minus 1.3% for the week. So let's go commodities. The 10-year yield climbed a bit, finishing the week in 4.09%, up from 3.9% a week prior. They did this jump and jump back down, and it's kind of the positive, but it's clearly right in this 20-day moving average, and I think that this is the moment where everything's going to turn a bit around. Now the VIX, our lovely VIX right here, just ignore this. This was this apocalyptic April, I would call it. The volatility index, the VIX, remained subdued, but saw a minor climb above 20 here. Just a minor climb, 20, almost 23, but it ended at 22.7, something like that. So this maybe not over, this is telling us, because it had this major jump high, but it came quickly back down again. I would love to see this just go up, be finished with it, but this still remains or will keep some pressure in the market. Now let's jump to oil. Oil, as I kind of predicted, is trying to go lower. WTI crude oil price stabilizes at 60 something, 60, it was at 69, came back down to 59, so it's trying its 60 range. It's going to stay below the 60, I believe, the next couple of weeks and months, even as OPEC Plus maintains supply discipline. Also gold, let's take a look at the highest mover for the year. Gold remains resilient, hovering just under the massive psychological $4,000 an ounce here. So keep a extremely critical eye on gold. If it's going to do the same thing as here, so it went from April highs till August. So 1, 2, 3, 4, 5 months. Going to do the same thing again. So it's going to oscillate here. Maybe a long strangle. Ooh, that would be an interesting idea. A strangle that would hold the 3,800 and the 4,200-ish zone, maybe a 4,100-ish zone. That may be an interesting trade for, I don't know, till May, something like that. But we will see. Also, Bitcoin just not having a good year here. Bitcoin down, remaining down. This is the daily chart. Let's also take a look at the weekly chart. It's currently at $102,000. Go to the weeklies here. It's still on the, it's still above the 50-day moving average on the weeklies. So maybe it's going to find resistance here and just do another leg upwards to its next expansion, which is probably going to be after or with the Santa Claus rally or after the Santa Claus rally. Now, if you have any kind of other thoughts on Bitcoin or gold or oil, please leave them in the comment section below. I would be happily thought something else, but my current analysis shows me that this is going to be a bit range bound for the month of November at least, maybe even December. Okay, let's jump to earnings. Earnings breakdown and a tale of kind of two markets actually. So this quarter, we had earnings season which exposed a minor divergence in the market. So let's just jump into earnings. I'm going to start here with AMD. Revenue, 9.2 billion, beat expectations. Adjusted EPS, $1.2 a share, beat expectations. Data center revenue was a standout, record quarterly revenue, and a massive 36% year-to-year growth. Client PC segment also delivered a strong 46% year-to-year rebound. So my current longer term thesis on AMD, it is a buy, but on the longer term, because the AI story is validated here. It's just being validated. Also currently between the 20-day and the 50-day moving average on a 51 RSI, so this could go lower, and MACD, clearly MACD sell signal, so I wouldn't jump into AMD right here. Let it calm down a bit, okay? Let's just release some steam, because the forward guidance for Q4 at 9.6 billion confirms their growth acceleration. Okay, let's go to the next up. Super Microcomputers, ticker symbol SMCI, had a really bad day, really bad week, I would say, going down, 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 5 days in a row from the 3rd till the 7th of November, maybe finding some footing here in the low 38 and down 39-ish range, because revenue miss, adjusted EPS miss, everything was a miss. That quarter, revenue 2.3 billion versus 2.8 billion expected. Share drop 11%, but actually, let me just do a measure here. They dropped from here to here 27% in 5 days. Boom. That's a drop for Super Microcomputers right there. Is this a buy right now? We're going to talk about this. The company cited a unexpected delay in the delivery schedule of some. There are my notes. So what I took from the earnings call, so I kind of hovering around here. So for some of the AI deals, pushing revenue into the next quarter. So for me, hold on the short term, buy on the long term, but I didn't quite make up my mind, because also if you take a look, not only at the MACD sell signal here, also on the other side, maybe just wait for a little bit of further selling. If you want to just dollar cost average from here, maybe that's an opportunity. Currently, underneath the Ichimoku cloud, a really, really bearish signal here. But hey, it still has support down here in the 35-ish range. So if the market decides that it wants to go lower, there are many possibilities here to buy in the 36 to 28 range, and then a very, very last buy in the 19 range. But if this happens, then all bets are off. Okay, so then you need to be prepared to hold this for a couple of years. You're really going to see some really good returns. Especially if you already bought up here, I would just hold the stock, maybe add to it if it comes further down, but for now, just hold on, okay? So that's a definitely hold for me short term, maybe a little bit of buying here for the long term. Next up, Palantir. I did a deeper analysis on Palantir, so definitely check out that video. In the short term, revenue beat, everything beat, extremely good company, extremely overbought, so strong overall results, but commercial revenue growth create a key metric here. So they just smashed it on commercial revenue. Continue strong growth. Also, Michael Burry shorting the stock for whatever reason. But do not forget, if that guy is shorting the stock, you don't know how his short looks. Maybe just shorting it until it hits a certain level. He leaves his short and also covers that and buys some stock, sells a put at that level, and also maybe sold a vertical, a spread, sold a put spread, going to sell his call, buy back his, sell his long put and buy back his short after that. Who knows? Who knows? But for me, hold. Momentarily hold. Let this do its thing, because valuation is still stretched after a massive run. Let's take a look at this company. What a run it had. What a amazing run it had also for this year. It did have, let's see here, from here to here, a 225% run. Wow, amazing. Okay, next up, let's now leave our AI and semiconductor giants. Let's move on to Uber. Let's go into a platform and digital commerce section. Let's just call this section of the video. So we got Uber. Uber gross bookings 49.7 billion, a beat. Adjusted EBITDA a 2.3 billion, also a beat. Accelerating trip volume up to 22% year to year, a strong profitability in both mobility and delivery segments. So Uber Eats, basically free cash flow of 2.2 billion was robust, and management announced a redemption of 1.2 billion convertible note, showing balance sheet confidence. So currently the stock for me, look here at the technicals, RSI 42, MACD small sell signal here. So definitely a long-term buy opportunity here. It's between its 50 and not 50, 100-day and 200-day moving average. It could go lower. So definitely interesting at the current position. For a long term, could be a buy. Maybe let the November month do its thing. Okay, so maybe apply a rule of 40, which is in play here. 21% growth plus 4.5% adjusted EBITDA margin, 25.5%. But FDF is the real story here. Okay, so I would say just hold on for a little bit. It's underneath the Ichimoku cloud. If this goes again upwards, maybe just a trade. I don't know. I'm kind of undecided. It's the middle of nowhere. I don't know what the stock wants to do. If it be oversold, so for example, here, and here, but right here, I don't know what. It has to make up its mind next week. So let it sit a bit. Let it marinate a bit. Okay, let's move on to the next stock. Airbnb. Revenue beat, EPS miss. Sadly, revenue and night/expenses booked were strong. However, a slight EPS miss and cautious commentary on near-time bookings growth led to a mixed reaction. So it had a little bit of a sellers, but quickly found its footing down here in the 117 mark dollars per share areas. So currently, man, I don't know. I would say maybe nibble on Airbnb, but it could be also a hold for me. Airbnb is a quality compounder, but highly exposed to directionally consumer expenses. So if the consumer market, if the job market is cooling, the consumer market is cooling, and we definitely do see signs of that, then valuation at the current valuations, this is still rich. I would still hope for a deeper pullback on Airbnb and then add for a longer term. So if you want to buy it here, just be prepared that you're not going to see that quick growth, maybe in the next couple of months, also maybe in the next couple of years. It's underneath the Ichimoku cloud. It's at the 38 RSI. If it just kind of sold off here and clear, maybe a MACD high signal popping up once more, then it would be a buy for me. But for now, I would say hold only if you want to do it for the long term. Just have it in your portfolio. Next up, we have Shopify. Ticker symbol SHOP, shop. Revenue 2.84 billion. That's beat, and adjusted EBITDA also beat. Stock sold off from its earnings even. So the entire week sold off. But on the earnings, they had they underlined strong merchant solutions growth. The key takeaways was a strong momentum heading into the holiday season. The company is successfully executing its pivot back to core commerce and increasing merchant adoption of its ecosystem. So, and this could be a buy because on the short-term technicals, it's kind of looking almost as a buy for me. It's in the Ichimoku cloud it was, and then it jumped out of there. So if this holds here, then this could have its next leg up. But also there is a possibility if the entire market comes down, trembling around here, then boom, 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 it could come down once more. But the company is growing. It does have profits, so fundamentally good company. Technically, stock is not yet oversold, so let's just let it prove itself to you. Next up, Spotify. Spotify is not having a good year. Revenue and user beat, gross margin beat, users and subscribers growth were robust. The real story was the continued expansion of the gross margin, driven by the company's focus on cost efficiency and stronger advertising business. But currently, I would almost nibble on it. So if you already own the stock, you could add to it. If you wanted to be in Spotify, maybe this is the time for it, but it's kind of trying to do here a downtrendish zone for me. So this, I don't know, kind of looks for me in the downtrend. Now, could this bounce? Yes, it could, and only on the technicals now. It could bounce, hit this 200-day moving average and come back down again. Because let's just take a look here at the 20-day. It's almost crossing the 200-day. Be very, very cautious here with Spotify. Full disclosure, I do own some shares, so I'm kind of thinking about adding here and also leaving it up here. That's it for Spotify. Now let's move on to another section, which would be healthcare, wellness, and consumer staples. Because you all know consumer staples are just doing so well. So let's start off with HIMSS, which is health. Revenue, 599 million, which you beat. Also adjusted EBITDA, 78 million, beat. Revenue surge, 49% year-to-year, driven by strong growth in subscribers, up 21% year-over-year, and higher revenue per average subscriber. The key concern, net income was down year-to-year, and margin contracted due to high marketing and technology spending. But this is a growth company, so they have to just pump out a lot of marketing in order to grow. So on the technicals here, it's kind of trying to come back, but still has down here a major support zone where it could come down. Also, as you can see, just as we had it with our Spotify, the 20 is nearing the 200-day moving average. So maybe hold off of buying this stock right here. Great growth story in personal telehealth, but a profitability narrative is getting messy due to aggressive spending. Long-term success hinges on whether this spend leads to sustainable, high-margin consumer retention. So maybe wait another quarter, wait for better margin visibility. If you just want to add a small little bounce trade here, that could be a possibility. So maybe add one small bounce here, wait for a clear oversold, clear RSI oversold, because the MACD is trying here, come back, but it's just not the right time yet. So it finished on the hammer green candle here underneath the Ichimoku cloud. Maybe just leave it alone for a couple of days or weeks. Okay, next up, our worst performer of my portfolio, Novo Nordisk. Revenue beat, operating profit beat, exposing growth driven by GLP-1 weight loss drugs. Wegovy and Ozempic, the demand is unprecedented, and the company is rapidly increasing their manufacturing capabilities, and they guided a little bit down. So buy for long term. If you already own the stock, maybe add a little bit to it. I definitely did add a little bit more to it because this will turn around. This, although most turnarounds never turn around, but this story will turn around. It's just a great company, so I don't think that this sell-off in the last year or so, or 2 years even, it was kind of this year, started in the last year, and so started in July, which was its top, and just continued down since then. I believe 2026 would be a pretty different year for Novo Nordisk here. So that's my take. Maybe buy for a long term. Definitely hold on to the stock. Don't sell it. It already also yields a over 3% dividend right now. So just think about it. Next up, Celsius, our favorite drink, which is kind of in cahoots with Pepsi. Revenue beat, EPS beat, revenue nearly doubled year-to-year, 97% growth, massive success in North America, up 110% year-to-year. International expansions is the next major level, so margins expanded due to operational leverage. So this could be a buy. This really could be a buy. Just take a look at this. Boom, boom, down, down. Oversold on our side, oversold on MACD, underneath the Ichimoku cloud. So if you want to hold this for the next year or so, this could yield some pretty good returns, even not necessarily a double from here, but Celsius is distributing, don't know about Celsius, the energy drink market, in the energy drink market. So taking shares from established players, the growth is clean, the product is sticky, and the margins are improving. So a strong long-term consumer growth story here. This major sell-off, everything is selling off right now. So I wouldn't take this as the end of the world for Celsius. Okay, last but not least, I already covered this in a more deep dive video. ELF Beauty, revenue beat, EPS beat, another stellar quarter showing exceptional execution and market shares gain in the beauty space. The brand's digital first strategy and focus on affordability continues to resonate in the Gen Z and millennial consumers. So this is a buy for me. I already added a little bit of ELF stock, a rare example of a company bleeding high revenue growth with expanding margins. They are successfully becoming a multi-category beauty platform. This is by the way, if you don't know, ELF stands for eyes, lips, and face. So this is a best-in-class consumer staple discretionary hybrid. But those staples are not doing so well. Just take a look at Procter & Gamble. So a couple of investor takeaways here, and looking ahead, I would conclude that this week will show us the following. The biggest takeaway from this earnings week is that capital allocation comes, and the AI infrastructure companies like AMD and also fundamentally SMCI are benefiting from massive non-discretionary capital expenditure. This trend will likely last a couple of years. So focus on long-term capital here, using weakness in a couple of them. So what to watch for next week? Geopolitical and energy. Watch for new supply demands signals in the energy market and the crude oil market, also CPI effects and earnings coming up. So here are the earnings for next week. Let's just be honest, the bulk of the major companies already, I think over 80%, 90% even, reported earnings. But we do have, let's see here, Startup, Rocket Lab, CoreWeave reporting next week, Occidental Petroleum, Big Bear AI, Wolf, Paramount, Skydance. I don't know, will they buy Warner Bros? Who knows? Who knows? So this was a Monday. Then on Tuesday, nothing that exciting. Oklo, maybe. So Oklo just said, oh my God, Oklo, this stock is just, don't touch this stock. Then we have Circle on Wednesday. So on Wednesday, we have On and Circle. Before the bell and after the bell, we have Cisco Systems. Then on Tuesday, we have Disney, Bitmine, Brookfield, the end. So this is the Brookfield Corporations. I am an investor in there. That's a great company. The doors are all before the bell. If Brookfield pulls back, I'm a buyer. Then we have Amit after the bell, and you and Quantum, also Red Cat. Then on Friday, we have Bit Digital, Qubit, and also Hive Blockchain Technologies. And that's pretty much it for next. So not that exciting of a week. And with this being said, let's jump into my trades. So we are currently on the year of $18,000. And we had not so good of an October. Let's jump now into November. Let's see how we started in November. So let's add our very first trade here. It is not a trade. It's actually a dividend on the 3rd from NLE Capital Management. Ticker symbol NLY. They have a massive 12% dividend yield. So it did yield a 46.64 euros here, which then converts into net $39 after taxes, of course. Also, we got a dividend. Oh, wait, this should be correct. This is a dividend. Update this. Then we also have from Campbell Soup Company, ticker symbol CEB, on the 4th. That was on Tuesday, a 33.75 dividend. Oh, that here dividend. And for my Substack subscribers, there is you can see my entire portfolio. There are two portfolios: the dividend portfolio and the growth portfolio. Investing in both of them, trading in one of them, investing and trading in the other one of them. And there's also the options trading sections. There's a really bit for a bit more for professionals actually. So don't just jump into options trading. If you want to check them out on the Substack, but it's only for paying members. Next up, we had also on the 4th, but here we had Ferrari, ticker symbol, best ticker symbol ever race. And we sold the entire Ferrari shares, 146 euros return here, which nets out into $124. Then once again, Mercado Libre, ticker symbol Meli. What an exceptional stock. Still waiting for a pullback to add furthermore to this stock. On the 4th, once more, sold my entire shares, returning in 793.3 euros. Then we also had a bank. So a bank with a major pullback, added a little bit, just a tinge to it. But also, if it has another pullback, make consider adding back to it once more. So first, Horizon, ticker symbol FHN, a horrible company, but they had a pullback and I couldn't resist the urge to do there a small trade. So $68 euros, sorry about that, gain there. Next up, sadly, Amazon, ticker symbol AMZN, also on the 4th. So as you can see, they are kind of before earnings. Sales 270.26 euros gain there. Then also we have Exxon, ticker symbol, you guessed it, Exxon, AXON. What an incredible company. Sold it also on the 4th for a 134.17. So take a look back here. I already sold some Exxon back here in the last week of October, and tell even more. So one here did return great profits in Exxon. And with this, I closed Exxon position, looking to reopen it once more. So all in all, November starting off really good. $1,268 last week, which is above the $500 target for each week. So I'm pretty happy with this. But I have to say I made that major boo-boo in October. Actually, I made it a long time ago with minus 1,500 shorting the market and minus 1,800 shorting the entire market, so S&P short. That really threw me back with $3,300. So major loss there, trying to make it all back. But the start of November was pretty good. Let's hope it's going to also end good. But that depends entirely on us, on our education, on our decision-making capabilities. So if you like this kind of videos, want to see more, definitely subscribe to the channel. This was Wealth Done, the weekend edition, where I'm Norbert Meinhardt and I build and protect wealth. Join me on this journey. Catch you next time. See you on Sunday maybe with a special episode. Let's see if I have the time to do it. If not, then see you on Monday with next earnings and so on and so on. So stay safe out there. Catch you next time. Bye.